Hi, this is Lara at Elliott Forex with a free US dollar index analysis up to and including the New York trading session dated Thursday the 5th of August. Starting with an analysis of an historical chart, let's go back to 1985 first and look at cycle degree waves. I'm really confident I've got a chart going back to the early 70s that shows a nice long 5 waves down to end a cycle degree 5th wave down in 1992. Followed by a 3-wave structure for cycle A, a 3-wave structure for cycle B that reaches comfortably beyond the start of A. So this is an expanded flat correction, now working on cycle degree wave C to the upside. This trend channel, these green lines drawn around cycle degree wave B are Elliott's technique, a trend line from the start of A to the end of B, parallel copy placed on the end of A, has been very obviously and clearly breached to the upside. This downwards trend for cycle degree wave B is over. C follows B. Next in the sequence, cycle degree wave C is therefore underway. I have a long-term target for you for this whole cycle degree C wave to end. May lie about 141.08. That's where the C wave will reach 1.618, the length of this A wave. And that's a pretty common relationship between the two for an expanded flat correction, which this is. Within this cycle degree wave C, we've had 1, 2, and we're working on primary 3 to the upside. A mid to long-term target for the end to primary degree wave 3 may lie about 102.87, and that's where primary 3 will reach 1.618, the length of wave 1. You may notice this chart's a little old now. There's some further movement off after this maroon 2 here that it doesn't show. Let's have a quick look at this more recent movement, just for the last 3 years or so. Here's the start of the cycle degree C wave here with a nice 5 waves for 1, an expanded flat ABC for 2. Primary wave 2 has a nice little trend channel, at least it does around intermediate C, which is very obviously broken to the upside. This downwards trend for primary 2 is obviously over. We're in a primary 3rd wave. Within this 3rd wave, we've had a nice long 5-wave structure for 1 intermediate degree, obviously broken out of the trend channel to the downside now. And we're working on intermediate wave 2. Taking you now to my daily chart just for the last 1 year, where we're going to have a better look at this structure here. And here's the beginning of this primary 3rd wave. Here's our 1, 2, 3, 4, 5 waves up for intermediate 1. This channel black lines here is not Elliott's technique. I've just drawn a best fit around this upwards movement. A 4th wave throw over often indicates a 5th wave throw over, and that's what we've got here. I'm not all that happy with this channel. It's not really comfortable to draw a channel around this upwards movement in its entirety that does use Elliott's technique and contains most of the movement, so a best fit is your next best guess. However you want to channel this one, it's very obviously broken out to the downside, therefore intermediate 1, or this upwards trend, however you wanted to label it, is over. We're obviously in a downwards trend of a reasonable degree. So I have this labelled intermediate wave 2. Within this intermediate 2nd wave, it's a simple zigzag with an A, B, C to the downside. This A wave, a really clean, obvious 1, 2, 3, 4, 5 wave structure. B, a little zigzag with a slightly truncated C wave here. So this is where wave C blue began. My target to the downside, 76.95, is simply where wave C, which began here, will reach 2.618, the length of this wave A. Wave C has obviously already passed equality with A. It's getting really close to 1.618, the length of A. And I don't think that giving a target of 1.618, the length, would allow enough downwards room to finish this structure. And I'll explain why when we look at the hourly chart. So that's why I have this target, 76.95. Still quite a ways down to go. Wave 2 black cannot move beyond the start of wave 1, which began here. Therefore, the invalidation point, 74.18. This is going to be a really nice deep correction for a 2nd wave, which allows for a really, really good, strong upwards 3rd wave when it begins. Taking you now to the hourly chart, where we're going to look at the last piece of this downwards movement. And within this wave C blue, we had a shorter 1, 2 to start it off, and it looks like we have a nice long extended third wave. My previous analysis had this labelled 3, 4 and 5 had a maximum distance, because in that labelling this 3, if it had ended here, was shorter than 1, which means that 5 cannot be longer than 3, because one of the core rules of Elliott wave is wave 3 is never the shortest. That doesn't mean it has to be the longest, it just is exactly what it says, it cannot be the shortest. So if we had pink 3 and pink 4 labels here as my previous analysis, that's invalid because this is obviously longer than this. Therefore, wave 3, which began here, same place as my last analysis, is extending. Pretty common to have a third wave extension. Within this third wave, we've got a 1, 2, 3, 4, and working on the last piece down for a fifth wave. When that's over, we're going to have some upwards movement for a reasonably sized correction at a pink or minute wave degree. So then that's going to probably take a few days, maybe a week. Ratios within this wave 1 green down between these orange waves. Wave 1 orange is 0.26 shorter than this third wave, a little bit too far off to say that they're equal, and there's no Fibonacci relationship between them. Wave 5 orange, however, is just 0.05 short of 0.382, the length of this third wave. That's quite a nice little Fibonacci relationship there. Within this wave 3 green between these orange waves, wave 3 orange is 0.38 shorter than 1.618, the length of this wave 1, and that really is quite a chunk for these small little waves, so I don't think that's a decent Fibonacci relationship at all. However, this fifth wave orange degree is just 0.05 short of 1.618, the length of this third orange wave, and that is a really nice Fibonacci relationship. If wave 5 green reaches 0.618, the length of wave 1 green, then this wave, that 3 down there should be a 5, I'll have to change that. But then this last piece of downwards movement for wave 5 green may end about 79.6. Within wave C blue in its entirety, ratios between pink waves, if this third wave at pink degree, this whole movement that you see on the hourly chart here, reaches 1.618, the length of wave 1 pink off to the left of the chart, that gives us a downwards target of 80.3. So I have a little shorter term target zone for wave 3 pink to end, 80.3 to 79.6, and thereafter at that stage expect a correction of a sizable degree, but that doesn't mean it's over. It still needs another wave, 5 waves down. There really is only one way to look at the downwards movement that has just been going on and on for the dollar. Wave C blue obviously has a third wave extension. It could be a first or a fifth wave extension, but it's easiest to see it meeting rules and guidelines labelled as a third wave extension. It's not over yet, a further bit down to go. I've got quite a low target there. We're going to have quite a deep correction for the second wave. That's all for me with your dollar analysis, and I hope everyone out there has a really fabulous weekend.